Fridays on Finance with Mac McChesney. Say hi, Mac.
Hey everybody, how you doing? Macaroni here.
Okay, so banks are collapsing, interest rates are rising. How do I be responsible making my home purchase? Now, one thing we want to keep you all aware of is that everything moves in cycles. And so there are 1 year cycles, there are 10-year cycles, there are 100-year cycles. And if you check out the book, The Fourth Turning, they've measured these 100-year cycles over 2,000 years. And the last 100-year cycle was the Spanish flu and World War One. And here we had the pandemic, and a digital war, a war of media. And so here we are in a winter cycle globally, financially, moving into spring. Now, when is spring coming? 2025. And so expect some rough patches in the next, 18 to 24 months financially as these cycles start to govern and control our economies. So, Mac, what's going on with the banks? People are worried about the banks collapsing.
Oh, it's true. We had Silicon Valley, and then just last week we had First Republic go down, and it's all over the news. Banks are failing. The sky is falling. It's collapsing. Interest rates have gone up. Not exactly. Not exactly. Two things I want to mention about the fail of SVC and First Republic. SVC was a very, very large bank with a lot of high-profile depositors that made some risky decisions in regard to startup companies and things of that nature. So when the rates went up, they were just overexposed, and they had literally no fiscal monetary responsibility, no oversight for like 6 months to a year before that happened. So that's what led to their initial issue. First Republic was a bank that dealt with really high-end one percenters. I mean, super high-end clients with a lot of money, a lot of investing, and they had a run on the funds there. So what did that do? That caused them to have issues. But that's not the majority of us. That's not those of us who live in the regular everyday markets. Our banks are still fine. Our banks are strong. You're still insured. And the market for housing is still strong. We see the reports coming out of Washington all the time on the housing reports, and they're good. They're still strong in the majority of areas. So the collapse isn't happening to the country. It's a couple banks making some risky decisions that led to them to have issues. And as long as you're fiscally responsible, we're not worried about that stuff in the markets. Interest rates may slow the cycle down in regard to buying, but there's more housing now. So that pent up demand, as you said, all the way from COVID, still needs to be filled. That need needs to be satisfied for people. So I think we're going to continue to be strong throughout the year, and it's only going to get better up to 2025, like you said.
Yeah. So we're in a growth of the Austin real estate market. From January numbers to March numbers, we're seeing an increase of sales by more than 10% month over month. So the houses are selling, and the new construction. Many of the new build people I'm talking with, because I got the ears on the ground. I'm out there doing deals, showing houses,
yes,
builders. And some of our neighborhoods are selling 8 to 10 homes a month in new construction, and so people are buying homes. And houses are moving, and the market is starting to move again. And it just takes a while to see the correction, because these cycles of correction are sometimes 6 to 12 months out before we can see what happened in the middle of 2022 when the interest rates started rising. Everyone froze. Now we're in that cycle of correction for the next few months. And we probably won't see the real boom in Austin until like mid 2024. And Austin's going to boom before everyone else.
Mm-hmm.
Because we have so much capital infrastructure here with Apple, Oracle, Samsung, Tesla's bringing in SpaceX and Newlink and Bastrop. We have a 546-acre Hollywood production studio opening this year in Bastrop. 546 acres. I don't even know how big that is. Like that boggles my mind. Like,
how long would it take me to walk across that?
Yeah. I think I'd have to bike like 20 minutes, maybe 30 minutes, just to get one into the other.
That's fun.
So yes, we have all this capital infrastructure hitting the ground, and they haven't started hiring yet. Like Samsung, 6 million square feet. You could fit like 5 Tesla factories inside the Samsung factory. So you better believe as the world basically, here's the truth of our economy. What happens in America doesn't affect Texas. What's happening in Texas doesn't affect Austin. So if you're thinking about buying a house, and you're seeing the bottom of the market right now with 3 months of inventory in Austin and then 4 to 5 months everywhere else, now is a really good time to invest in your home.
Yep.
Or when all these companies start hiring and all the relocation starts again, we're going to move back to a seller's market. Inevitably, it's inevitable because of all the people relocating to Texas.
Yes.
It's pretty exciting. And so interest rates for first-time homebuyers, like what are you seeing right now for first-time homebuyers?
DPAs, that's down payment assistance. When you say first time home buyer, there's basically three different types. There's a 3% conventional loan, so you don't have to put 20% down. There's a 3.5% FHA loan, and then there are DPA programs. So we're pretty much in the sixes, kind of on the high side or the low side, depending on which loan product. So I would tell you high fives to high sixes will get you FHA 2 conventional. Conventional is usually a little bit higher because it's not a government insured loan. Mm-hmm. And it's got some benefits such as loan to value, debt to income ratio. But in that 5 to 6% range for a well qualified buyer, marginally qualified buyers, you're still high sixes to sevens. So they're still much better than they had been long-term in the past. We all just need to get 3% and realize that was a great time. That was wonderful. It wasn't normal. We're getting closer back to what I think would be that 5% rate would kind of be the target point. So we went up a little bit, we dropped, we've gone back up a little bit, but the corrections are still happening. So what we all need to understand as consumers is when we see a 0.25% rate on the TV, that doesn't mean your rate just went up 0.25% across the board. That's what Arttemis is talking about. Sometimes that takes 6 months to a year for us to really see what happens, because all it means is the bank's got a little bit smarter margin on their profit. It doesn't, and they understand that. So they can't just raise the rates and all of a sudden have everybody stop buying. So they take a little bit less, shift their money or their assets from one place to another, but they have to keep the housing market strong because let's face it, mortgage-backed securities are what drives the U.S. economy for the most part. So they have to take care of that marketplace. So I don't see crazy things happening. I think it's going to get better. We all anticipate effective rates to us going down a little bit, even though the Feds had a raise on the interstate banking rate. So we're all positive about that over the future because that's we see that coming.
Excellent. Yeah, and the saying is, you marry the price, you date the rate.
Yeah.
And so, as a realtor, we want to negotiate the best value for your home by getting you the lowest possible price. And I'm working with a buyer in Treviso and Leander right now, and I'm looking at there's been 18 homes sold in the Treviso neighborhood over the past 90 days, and the average home sold between $40,000 and $60,000 below list. And so, and these homes are higher price points, so there's more negotiation room in the offer period. But we're seeing there's some good deals out there. There's some really good deals out there in the resale market and the new construction market. Of course, they're giving you closing costs, and I just put a house under contract for an investor. They gave him a fridge, a washer, and a dryer, and they covered his title policy. So, it's like a turnkey investment for him. So it's really, there's some really, really good deals out there. And so thank you so much, Mac, for sharing what's going on in the market updates. Just expect a little bumpy ride for the next 18 months until 2025 is when this next 100-year cycle is complete on the planet. And these cycles govern more than just what we can see and hear. Like there are major movements of energy moving through everything right now. We're going to go through a global reset, and then we're going to come out the other side, and it's going to be a renaissance because we're going to have artificial intelligence, robotics, 3D printing coming online. We're going to have more wealth, more opportunity, more abundance than we've ever seen in the history of humanity, on the other side of this 100-year cycle. And I'm somewhat of an optimist when it comes to this stuff. But
you're an eternal optimist. You're an eternal optimist. I love it. That's what we need more of.
Where should your focus be? On what's missing or what you're creating?
Yeah.
It's like the media uses fear to keep us in control. But when you're focused on the future and what you're creating, it's better to focus on what's coming and create the abundance and blessings of your life through the future. And I believe the future is very bright. And for those of us leading and creating, we need to raise people up and give them not just hope, but the good news that this spring season that's coming in 2025 is going to be one of the most amazing periods of humanity. It's going to be a modern day renaissance. And it's going to take all of us standing up and leading and creating and get off the national media. What's happening in Austin and Texas is very different than what you see on the news.
Yeah. I had a conversation with my mom yesterday, which was funny. She had gone to visit someone who was speaking about a really negative event that had happened in the past. And she called me last night. She's like, "Oh, I listened to the speaker and it was so great. Now I actually know what happened. And I'm so mad at that administration for what they did." And now, Mom, I said, "Mom, What are you doing? I'm mad at them. That's the past. I said, you keep your eyes focused on the future, and you can allow your ears to remain in the present and the past. But your eyes need to be focused on the future, not looking there. And what it did, it upset you. That made no sense to me at all. So exactly what you're saying is focus forward, focus on the positive. And what is the saying I heard the other day? If you don't see a positive person today, then be that positive person for everybody else. That's just how it works. I love it. I love your enthusiasm, Arttemis. It's so inspiring.
The best way to predict the future is to create it.
Yep.
The best way to predict the future is to create it and be the author of your life and enjoy the creative force and the creative power. When you're pulled by your vision, not pushed by your problems, you create your vision and you turn your vision into reality. And it does require a tribe and a community. So that's why I bring Mac here every Fridays, because he's one of my top lenders. He's got a team over 50 loan officers. He does a great job. So Mac, how do we get a hold of you? What's your number?
512-842-7707. And I do have to make a correction there, Arttemis. We are now at 70 loan officers. So the team
70 loan officers. All right. Success.
Companies are downsizing. We are expanding.
Yes. That's such good news. Such good news. So Mac gives you excellent service for your home financing. If you're looking to understand your numbers, get clarity, give him a call. 512-842-7707. We look forward to serving you and making your dreams come true with home ownership. We're here to bring wealth to your home, wealth to your vision, wealth to your family, and wealth to your legacy through real estate. And we'll see you in the next Fun Fridays. Next Friday, y'all have a great day.
Have a good one, folks.